Well, welcome everybody to another episode with Data and Dollars with Doug. Doug, how you doing today?
I'm doing well, sir. How about yourself?
You know, you're looking pretty good. You've went through a lot here lately. Some of the people that don't know you on a personal level may not realize it, but you went in and got a new hip, super bionic hip, make you run faster, jump higher.
We're not going to run fast or jump high for a while, but I do feel a lot better. I'm actually standing up right now. So, yeah, I think since the last time we did this, I had eye surgery, had a patch on last time. So I've just got my eye open now and a new hip. So I am about medical out. I've met my deductible for 2026. So I'm going to
already. We're not even done with month one.
I'm an overachiever. Yeah.
You are an overachiever. Always have been. Well, you look good, brother. It's nice to see you. So, hey, I've got just a few questions. One of them came from one of our dealer partners, and it is, from your perspective, what has changed in the banking or financial institution's view of a healthy business today versus what a healthy business was 3 to 5 years ago? And I think what she was getting at was, what does she need to get her books to look like to make her local bank appreciate the financial position she's in now versus when her dad was running?
Gotcha. Yeah. So banking is still a lot about basic blocking and tackling. There's still just some fundamental things, but communication with your lender, letting them know whether you're feeling some kind of stress early, don't surprise them. So the first thing is make sure you've got a good relationship. I think that's paramount. Now, a good relationship to keep it going, though, means you're going to do the right things to protect not only yourself, your customer, your employee, but also the bank. It all seems to work in hand. So from a banking standpoint, before we were worried about credit stress, several years ago through COVID, when there was liquidity everywhere, there was money flowing, ag seemed to be in a good space, building, construction in a good space. There were still deals to be had, and there wasn't as much risk, and you could look at it from a very global standpoint. The one thing we're doing in banking now is we're drilling down. If you want to do something new, it has to pay for itself. You can't subsidize it with other things. Deals need to be able to be seen as a freestanding and not just a global cash flow, which is interesting because that's going to require more cash down into things to make sure that it works. We're still going to cross collateralize. Banks are always going to take enough dirt or equipment or buildings to make sure our risk is mitigated. They are asking us to make sure that every new opportunity, so if you're going to build a new building, it needs to be able to say, well, because we're going to build it, we'll have this revenue generation, it'll make the payment. So I think cash, making sure your working capital is certainly better than 1-to-1, 1.5 to 1, always feels better where you've got enough, you can weather a storm, right?
Right.
And that new projects can stand on their own merit. So, and like I said, having a conversation before you go out and start spending dollars on moving dirt and that kind of stuff, really planning ahead. People who have mastered control of their cash flow and their budgeting and have strategic planning, good businesses that think ahead, man, for a bank standpoint, it's a lot easier for me to tell that story, to go out and make a $5, $10, $25 million loan, whatever it is, to somebody, and the regulator come in behind it and start asking me questions if I know that those principal blocking and tackling elements have all been handled.
Yeah, and that's what's great. Yeah, no, that's a really good thing that I remember when younger in the business and having smaller banking relationships. That was really, really important, right? And then it seemed like the larger the organizations grew, those relationships changed. Sometimes we had to move to a different financial institute, and those institutions larger. And back then there was a lot of regulatory issues, and I don't know how they are today, but boy, there for a while it was brutal. Just all the paperwork and the dotting every I, crossing every T, versus just walking in, shaking hands with your local banker and saying, hey, this is what my plan is. What do you think?
Yeah. Well, I mean, business in general is so much more capital intensive today. We've always said that ag and construction are capital intensive because the cost of the equipment to do the work, right?
Right.
Or the cost of the land or building, it's all gone up. Inflation is just a fact of life. How do we deal with it is what we're talking about.
Right.
But a lot of times we're not the only lender, or we're not the only agent in the capital stack. Maybe there's private equity, it could be friends and family that are chipped in, or there's a partnership level where there's 5 or 6 different partners. So you've got to understand, as the bank, we have to understand what our position is in the entire capital stack. So that's that communication part of it. And the fact of the matter is, I'm a community bank guy through and through, and the small banks are still the best deal. in the sense of, and are probably the most relationship oriented. That's what makes them kind of who they are. And that's a good thing. But they're going to need a friend sometimes. And have to bring in other banks to participations and that kind of stuff. And it's because it just takes so much capital to run these dealerships.
Boy, it really does.
It does.
And I agree. I like the relationship at a community bank much better than going to really big financial institutions where, you know what, we are really just a packet on somebody's desk.
Yeah.
And sometimes those numbers at a community bank may not make total sense, but they believe in the character, they believe in the reputation of the person requesting the funding, and you can get a little more stamp of approval sometimes.
Well, you just said the most important word in the whole capital stack, and that is character. I'm a firm believer that character has paid back more loans than cash ever did.
Amen.
When somebody's got their back against the wall, they will do things in a good way. They'll make the hard decision to sell an asset or to stop doing a line of business or whatever. You know, somebody that has the great character will put a stop doing list together to save the overall greater good. And so character still counts. I'm afraid if I ever get in a position in my career where I can't bring character as a part of the decision process, not interested. So
I would second that with you in a moment. Yes, sir.
Amen. That's right.
Hey, so I got another question for you, and this didn't come from our dealer pool. This is just me thinking. But what are you, in today's economic conditions and all the data that's out there, what are you looking at that may or may not be hitting the frontline news, the mainstream news? Is there anything that you watch that maybe is not getting as much attention as you think it deserves?
When you say things that I watch, are these where I gather my economic information as far as how to plan and prepare for what we do? Yeah. So there's a lot of areas and that we look at. Mainstream media is going to give you snippets and nuggets and will drive your thinking one direction or another, and will sensationalize things without telling you probably the whole truth. And you got to peel the onion back a little bit. And typically, I'm very consumer oriented. The consumer still drives the fundamentals of our economy. And so if we're not buying household goods, if we're not still buying cars, what are the delinquency rates? What are our credit card average outstanding in a household? What are the delinquency rates there? The big thing now too is fraud. How much of that is out there because businesses are losing tens and thousands and millions, in some cases, dollars to fraud losses and that kind of thing. So you want to be really careful on those things. But consumer underwriting, I want to know where housing, I want to know where job starts are at. And I want to watch the trend lines because, 1 month will not a trend make. But if you put enough data together, you'll start to see where the consumer's at. But when they quit flying, if they quit buying vehicles, if the credit card balances go up in delinquency, you can tell when the consumer's stressed, then there will be stress to follow in the economy to come. So prepare yourself accordingly. If they're spending money and we're not, savings rates still stay up and the spend is up, that's a good day. But
that makes sense. So no, it is. But how about there? Again, sensationalized news. Is there as much risk or worry or concern in commercial real estate as I'm hearing? Like I'm hearing the foreclosure and just the default rate on commercial properties that financial institutions are holding is at an all-time high, and they're predicting it to even get worse. Is there any really truth to that?
Yeah, there's pockets of that. So if we look back to pre-COVID, commercial real estate values stayed pretty level, delinquencies stayed pretty level. Well, then we go through COVID, and there's all this money, and people had to deploy that, and they got into overpaying for leases. Because they had so much money, I could pay you down more. Now the cost went up because once you drive that in revenue in a property, all of a sudden the appraiser walks in and goes, now your $500,000 building is worth $800,000. Well, and they want to borrow against it instead of doing cash out refinances. Yeah, and then so the regulators started coming to us and asking us as a bank to go, okay, all right, we fear commercial real estate, and that was really predicated by office space in metropolitan larger cities. So as a smaller community bank in rural America, we don't have a piece of a high rise in Chicago or Atlanta or somewhere in New York. Larger regional banks are probably going to have more of that type of credit that the regulators are most worried about. So they came to us and said, break your commercial portfolio down into segments. How much do you have in hotels? How much do you have in strip centers? Or how much do you have in one owner-occupied office space? And there was 18 or 19 different categories. We broke our whole portfolio down and realized that we were pretty well distributed. We didn't have a concentration in any one area. And we've got levels of concentration that we can adhere to as a percentage of our bank's capital, of our net worth. So keeps us obligated to stay within some framework that will keep a bank solvent. But yeah, there is delinquency higher. I think we haven't seen credit stress in the banking system really since 07, 08 in the housing crisis. It's just really not been there. I think they're probably the ag sector right now. Interestingly enough, if you have real estate on your balance sheet, you probably are going to find ways to continue to either get restructured or sell an asset to overcome shortfalls in the ag side. But rural banks not very heavily issues with commercial real estate at this point. The cost of hotels has really gone up. The cost per door, not a delinquency issue yet, but it has certainly caused some projects to be slow to completion. They've had to go back and raise additional capital. I've seen some of those go on. But the average small business, as long as people are still buying real estate, we still see things selling for reasonable amounts, which is interesting. The farm crisis in the 80s, nobody had any money, so it really wasn't worth anything. And it was a supply-demand issue. There's still cash out there. Corporate America still carries a marketable amount of cash on the balance sheet. So when they want to protect value, they see land or commercial real estate as a store of value. We'll continue to buy that.
Yeah, and I agree, because where I'm at, we don't have any skyscrapers or anything like that. But yeah, no, 18 foot, that's about as tall as you get. No, but our commercial real estate market seems relatively solid still. You see a building up for sale and it's on the market maybe 8 months, 6 to 8 months, and it's gone. Prices are still pretty solid. I wouldn't say they're overinflated, but I agree there during COVID time when there was a lot of cash, I did see some of the prices of real estate around here even jump, and I went, but that's tended to taper back down.
Yeah, and I think the one good thing, if you think back to the housing crisis of 08, 09 that I mentioned a minute ago, coastal areas saw a 30-40% reduction in values. Good old Henderson, we might have seen 10. Right. So rural America, the good thing about us is we're not too flashy. We're a little vanilla. Vanilla's okay, but sometimes it's good. But you don't have those big swings in valuations. And so, as long as you don't make for you as a business owner, don't try and go out and borrow your way to prosperity. Be conservative in those estimates. Don't go out and try and do cash out refinances just because one man's opinion one day said it was worth X. It's worth what it can cash flow.
There you go. That's the key, right?
That's the key.
That is the key. And I think it'd be interesting on one of our episodes to have you give our audience a breakout of how cash flow really works, Because I think a lot of people think they understand it, but truly don't understand it. You know what I mean?
Yeah. Yeah, the hard part about small business America is as long as we keep cashing checks, they think they're doing okay.
Right.
In some respects. Cash flow is so much more than that. There's so much more going on. A lot of small businesses, and I say small, when we were talking about these dealerships, we're talking about a lot of money. Hundreds of millions of dollars flowing through these things. Yes. And they need to have an institution and a treasury management program that helps them understand that. Like that's one of the communication things. If you're still working out of your checkbook, I'm going to caution you, your accountant, need to go find a bank that can help you make sure that you are set up and you have a treasury management where you know how your money is coming in and out and that you're automating everything and then you're not only that, but you're analyzing it.
Correct.
Because a lot of times it goes, as long as the bank's not calling I'm good, please don't put that pressure on these bankers. We're not that good, man. You got to focus us in. So
it's kind of like our college days, right? With that old joke, I can't be out of money. I still got checks. Look,
You wanted paid. Oh,
yeah.
I want a check. Yeah.
I can pay you ahead. You take a check? Yeah. Oh, well, there you go.
There you go.
Yeah, no. And you know what?
More sophisticated now.
Yeah, that's great advice. And you know what? Down that same vein, Doug, say you're leading the leadership team at a dealership whether it's our automotive stores, again, a construction or ag store, it doesn't matter. What financial discipline would you say, hey, team, in the next year and a half, here's a couple items that I really want us to narrow down and focus in on as the leadership team of a medium-sized dealership group. What would you say? I really want you to protect this. Even if growth slows down, I want you guys or gals to protect this. What would those couple things be?
Okay. Phenomenal question, Wayne. And I think that, again, there are just some things that if you don't, irregardless of economy, good or bad, if you keep your margin matters. You can't price yourself out of the market, but if your margins stay solid and you don't get desperate to move inventory, I mean, there's a time to take losses and there's a time to not, but that gets back to that cash flow management. But protect your customer relationship. Know your customers. I mean, there is no reason that dealerships that deal in tens and hundreds of millions of dollars of real estate sales or tens of $1 million in parts and service sales, automotive, construction, or ag, are not knowing their customer base. Know that flow. The automotive is going to be much more consumer driven, not as depth, but the construction and ag, you should know their balance sheets like I, the banker, do. You need to know if your customer is over levered, because you may be pouring into someone that will not pay you back and will drag you into bankruptcy.
Correct.
Their bankruptcy, not yours, but you'll get stuck in there. You'll wind up doing services and selling parts that don't get paid back. So kind of have a feel for who your customer is and what their financial strength is. One of the things that have caught dealerships off guard over the years is that just because someone can get credit doesn't mean that they should have that credit. Don't use that as your marker for, oh, they're a good customer. They've got a line of credit with XYZ over here. Because XYZ might be on a completely different playing field, may have a different set of criteria that you and your business should not be following. But yeah, I would protect the margins most up front, but I would protect my key customer relationships, because it's not rocket science. 80% of your revenue is coming from 20% of your customers, and you got to make sure you know who that 20% is and how well they're doing. Don't let that interrupt your business because you failed to have a good conversation with some of your key clients.
Yeah, no, and that's great advice. I was just with the dealership group last week and, plotting out the 2026. And when it came time for fixed operations discussions, we talked to specifically the parts department about getting out and getting with their customers to see what's going on, what's happening with their customers. And, are you doing any on-farm visits? Are you going to, this particular dealer was an ag dealer. And it was like, when was the last time you or your people were out on their farm talking to them and finding out, what do you have on as far as, just go through the equipment list, right? Are you still current? What we show, is that still current with your asset list, And a lot of dealerships gotten away from that. There was a time when the phone rang, you made a sale, it was pretty easy, and dealerships got away from your blocking and tackling.
Yeah. One of the things that I feel like is most important in any sales environment, in any industry, is do not guard your furniture in your office. Your furniture is going to be fine. Get out, go see your customer. But it pains me to watch people sit there because they'll say, well, what if the phone rings? What if it doesn't? Go find it. Go visit. And there's nothing better than you can do than go out and visit someone's business, place of work, the construction site, whatever the case is. And just because you learn so much when you get out there. If I walk onto a farm today or into a dealership and I see things that are deferred that I think are important to the success of a dealership or to a farm or at a construction site, you can do it, have enough conversation, you'll start to field underwrite and realize I either need to be in this more or I need to back off and not be so aggressive with this customer for certain reasons. But if you're running your business with character, you're going to make sure that you've got the right people that you're trying to sell to.
And talking about character, and we've talked a lot about the relationship. What's one assumption you think business owners commonly make about banks or lenders that you wish they understood a little differently? Right?
Well, first, I think all bankers make mint. We don't. We just handle it. It passes through, and we get a few bucks at the end of the week to go buy a cold beer and a hot dog.
You don't keep a lot of that? You don't keep all that?
It's a total myth, Wayne. It's a total myth. Yeah. No, assumptions that they make about bankers is, and one of the things I had to learn in my life was that, real honestly, businesses use banks, right? We're a tool. We're a part of the toolbox to make a business prosper.
Amen.
If we're going to be in that position as a banker, I need to make sure I'm doing the best I can to listen, to learn, and to provide advice and give good counsel where it's warranted. to help people out. I think the biggest misunderstanding is sometimes people they pick a banker because they like them, but the banker may or may not know how to give them that advice and how to be a part of their very internal network. I've always said, you need, just like a group of pallbearers, you need a good group of people around you. They're going to carry you to your grave, but it's a banker, it's an attorney, it's an accountant, it's your seed guy, or it's your tractor dealer or whatever. You need to have good relationships in that business piece, and you need those folks around you. So a bank is one part of that. Don't assume that everybody is giving you advice that is in your best interest.
That's key. That is a nugget right there. That is a good one right there.
Each one of those people are trying to make a dollar off of you and your business. If I'm giving you, I need to be giving advice that says, yes, I'm going to profit from you, but you're going to profit because of the advice that I'm giving you, the structure of the loan that I set up for you, or how we manage your cash flow and treasury management, or whatever services we're providing, or it could be estate planning, it could be 401ks for your employees, whatever part of the financial realm I play in that relationship. I need to make sure, and this is my personal opinion, I need to make sure that I'm adding value to your business. And so don't assume that everybody is giving you advice that is in your best interest, so double check and cross-reference and research. Don't just take people at their word. People are, and I'm a generally people are good at their word kind of guy, but it says
there's that old saying. There's that old saying: trust but verify.
Verify, yeah.
And you're exactly right.
Yeah.
I've seen, and I've even had it myself, where I have who I consider a trusted advisor, right? Somebody that, again, in business, my banker, my accountant, my attorney, those are all trusted advisors. And just because my CPA may say, hey, we need to do things this way, I may have heard or learned or seen somebody else in business that does it a little differently.
Yeah.
And they may not be totally aware that, yeah, you know what, we could do this, or we should do that, or you know what I'm saying? So again, I think it's character, like we've talked about several times already, and the trust but verify.
Yeah. And Wayne, the way we met was in a peer group.
Yeah.
We were in the same business, but we weren't direct competitors, but we sat around and shared ideas. And I'm a firm believer you're still a product of the 5 people you hang around the most. You need to be hanging around with other automotive dealers. You need to be in peer groups of construction or ag or whatever your business is. And you need to be talking about how to figure out the variables to make you a better company. To do it on your own and in the advice of people that are selling you something probably is going to keep you from being a great institution. Talk to your peers. Peer accountability always moves the ball forward farther and faster. Just because it's people who are like-minded and want to succeed, that's who you need to have around you.
Right. And what's that? Another old saying that comes around, Doug, it says, if you're the smartest person in the room, get to a different room.
Get to a different room. Absolutely. Yeah. I want to be around people that are way smarter than me.
Amen.
Like, that's why I liked you, right? You were way smarter than me. But yeah. But it is good, because the one thing in a peer group setting is I may be doing one thing in Kentucky that you're doing differently in your part of the world. And all of a sudden we realize, well, if I tweak mine a little bit this way or you tweak yours, and it's the details that make people incrementally great. And it's the little changes you make year in, year out, day in, day out. And it's not this big sweeping thing. It's little changes made every day consistently over time that when you look up 5 years span, you're like, how did we get from A to B? Well, we made little changes consistently every day and stacked on top of each other. But you got to get those ideas from friends and folks in the business that don't try and reinvent the wheel. It's already rolling. Just figure out a way to make yours roll
a little smoother. Yeah.
Yeah, that's right.
And that's why we do, and that's a great pitch, for WB performance groups. That's why we do those groups, and that's why we started them, is to help enhance everybody, because that high tides, all ships rise, right?
That's right. Yeah, I really wasn't going shameless self-promotion on that for you, but yeah, that's exactly what you're doing.
Hey, no, it was a great
I love that.
Yeah, it was
like you jump in there, Wayne. Yeah. Right. Hey, I'm a WB guy. I'm supportive.
That's right.
Yeah.
That's right.
It's all good.
Yes, sir. Well, Doug, it's been a blast. It's nice to see you're up. I can't wait to see that hip out on the golf course running around chasing the little white ball this summer. Should be able to do that.
I got to go off in the weeds, because that's usually where my ball winds up, behind a tree or in the woods somewhere. So
yeah, you and me both. Brother, I appreciate your time. I know our audience does as well. Until next time, have a great day.
Take care of yourself. I appreciate it.
All right.
Man.